The next section is about why DeFi needs to stay true to its cypherpunk roots. And I hope they're going to explain for some of us what cypherpunk is about and what that whole era was. But to understand it, we've got to understand where the origins of crypto, where it came from. Those who believe that open source software and strong cryptography, censor-resistant financial systems, will they survive or will they be doomed to fail, similarly to by those who opposed the internet before? Now, the panel comprises of Barney Mannerings and David Namdar. I'm going to let David introduce Barney, but David himself, you've heard him speak a couple of times, he remains the GP of Coral Capital. He's investing heavily in the space, and he's a great friend of CfC, being on our volunteer advisory board. Please welcome David Namdar and Barney Mannerings.
I've had the pleasure to meet Barney Mannerings, the CEO of Vega Protocol, and most importantly, different than I think a lot of people here, he comes from really a technologist roots. And so, as a starting point, I always like to help people understand really the start of all of our journeys. So Barney, why don't you tell us kind of a little bit about yourself, how you first got involved with computers, the internet, and kind of where you're from?
Thanks, David. Absolutely. So as David said, I'm a technologist at heart, a bit of a nerd. I first started using computers, probably age of 6 or 7 in my parents' house. Fiddled around, learned to program in BASIC, and got sort of interested at that point. But I guess my interest really took off. I went to university and studied computer science. I started to learn about cryptography. I learned about what was called the first crypto wars, where there was kind of this battle between the nerds and the people who were interested in freedom and the ability to have cryptography and privacy, and what was mostly the US government at the time trying to restrict that and trying to sort of put controls on crypto. And needless to say, we won those wars, but now there's a sort of similar feeling brewing around crypto, with the kind of the crazy sort of anarchist libertarian side on one side, with the shut it all down and ban it on the other side, and probably somewhere in the middle, which we'll be talking about today, the side where we're interested in some of those key founding principles, but also in the sort of pragmatic integration with the real world. So that's really how I started to get interested. I've always been interested in that stuff, and I found this sort of fascinating when Bitcoin arrived. It really got me excited to see how we could build a kind of an internet of value.
Right. Now, what were some of the things that really, even because you were looking at this stuff even before Bitcoin was introduced. So what were some of the important principles? And I guess as Eric had asked, could you explain a little bit what the whole cypherpunk movement is and where we came from?
Absolutely, yeah. So the cypherpunks were a mailing list, actually, so an email list that existed, sort of a couple of decades ago, really now. And it was basically a bunch of cryptographers talking about schemes and ways of having privacy online. And one of the things that cryptography allowed us to do, and once cryptography was combined with computers and the internet and was allowed to be sort of free from the government's rules eventually, and what it allowed us to do was sort of to mathematically prove we can have privacy. And you see this with things like Tor, which allows circumvention of censorship in regimes like China, where they may be trying to shut down access to the internet. You see this in originally things like PGP, which was pretty good privacy, which was a cryptography software that allowed you to encrypt your emails or messages to and from people, and more recently with things like Signal. And this for the first time allowed the sort of mathematical proof that your communication was private. And that mailing list was all about schemes for doing that. It was anonymous remailers, so you could send email anonymously. There were encryption schemes. There were ways of having group coordination. And initially, some of the discussions about different ways of potentially having sort of truly anonymous, private, and decentralized, so not backed by any given bank, money. And you had things like DigiCash and eCash and a load of other things that sort of came and went until the Bitcoin white paper came along and finally created a solution that actually stuck for solving the problem of fully decentralized, anonymous, private money.
Yeah, exactly. And so I think it's important for people to understand. You might hear terms cypherpunks and even cryptocurrency and crypto, right? They actually have scared a lot of people off over time. But really, when you think about it as just a group of passionate technologists that didn't just take for granted and use the internet and the tools that were introduced to them, but actually kind of questioned why and how and the importance of privacy. Really, like ahead of a lot of the people like Eric Snowden and some of the other pioneers down the line who kind of were ones to challenge and tell people to really, they're missing a lot of important things and fundamental aspects of the internet that they're taking for granted. And so then when you kind of got deeper into the space, right, what were the first things that you really started to look at and found interesting? You mentioned loyalty points before.
Yeah, so and one of the ways I think about this, I like to compare it to the internet because I think there's a similar story. And when the internet first came along, you had a narrative which was about internet stocks and companies and making money, and then you had a narrative which was about really detailed underlying technology that enabled all this to happen. And the thing that was interesting as a nerd was not making money, but it was what's the underlying technology that's allowing people to make money that people couldn't do before? What's the thing that creates Amazon where there was no Amazon, or creates Uber where there was no Uber, or Google where there was no Google? And those are fundamental technical innovations. And the first uses for those might be like toy-like, they might be scammers or criminals or people trying to do weird stuff, but eventually what comes out of them is fundamental new products and services that benefit everyone and that really, really change the world. And the same thing happened when I started looking into crypto. And actually, Bitcoin itself didn't get me super interested. It got me interested as a sort of privacy guy at heart. I was started to eventually in 2013 decided to properly mine some Bitcoin rather than just running the software on my laptop for the hell of it. But even so, it was kind of like, this is an interesting thing. As a privacy guy, I like it. I want to hold some. I'm gonna pay attention. But it was the Ethereum white paper and the launch of Ethereum that got me excited, because this was when someone started saying all those programs that you're running to create internet services, you can do something like that, and it is only something like that. It's not really exactly the same, but you can do something like that on a blockchain without a server. And now you start looking, and I spent the early part of my career, the first couple of decades, in the traditional finance world, doing things like designing matching engines at the London Stock Exchange, designing trade systems, risk systems. So I saw the whole trade life cycle laid out in front of me, and I started looking at what Ethereum could do and saying, I can replace these bits of this using Ethereum and Bitcoin and whatever as a settlement layer. I can replace these with code, and now you no longer need a clearinghouse, or you no longer need an exchange, or you can have this extra permissionless innovation, or you can move the market that much faster, or this is not gatekeepered, or this is available globally. And looking at these little bits of technology, and you hear people in DeFi and crypto talking about DeFi primitives or Lego blocks, and you're looking at those bits of technology and going, okay, if we connect them together in different ways, we can do stuff we could never do before. And that was really when I started to get excited. And the loyalty points thing, I had been looking at loyalty points. If you issue loyalty points, now you have a liability to someone that they might come and spend them. They sit on your balance sheet. That can be problematic. So people were looking at ways to kind of make loyalty points semi-fungible, to trade them, to have them owned by funds, Avios versus BA points, etc. And so we started looking at blockchain for that, and that was one of the first use cases I looked at. But in general, it was looking at these technical blocks and going, hey, look, we can do a whole bunch of stuff that we could never do before without tons and tons of infrastructure and regulation and bureaucracy.
Yeah, exactly. And so I think that's really where, it's important to kind of now go back to like the emergence of DeFi. And where DeFi came from was you had a number of technologists and a number of cryptographers and a number of people from the finance world that all started approaching and saying, similar to you, they're like, okay, well, Bitcoin has a ton of value and is interesting, but there's not all these other interesting things that you can do on top of it. And so with the emergence of Ethereum, with other competing platforms, there were some other early ones, Counterparty, Mastercoin, some of the other earliest projects. And so through that iteration, people started innovating on top of it and saying, all right, here's all these 100 different ideas and hundreds of different ideas actually that happened during the internet 1.0, 2.0, and now can be recreated in a decentralized way. So the concept of decentralized finance, to me, I think some of the earliest kind of things to pay attention to is the introduction of stable coins, right, which David Johnson had mentioned, Tether on Omni. That's one of the first instances of decentralized finance. And then now, over the last couple of years, really we've seen it take off. And so how do you think, what do you see as the most important parts of kind of the current state of DeFi today and how it exists?
Absolutely. And in fact, I would say DeFi started even earlier than stablecoins. It started with tokens. And one of the really interesting things is people say there's no lending in crypto because you either hold coins or you don't. That's sort of true and it's sort of not, because if I do an ICO and if I sell 100 tokens for 100 Bitcoin, we now have 200 Bitcoin between us. We have currently 100 Bitcoin worth of tokens, and we have 100 Bitcoin. And so we've created borrowing and lending. And by that, what we've really done is created an extremely clear case where you now have something that might be worth a lot more, that's your repayment on the loan, but has a risk of not being worth anything, that's the risk on the loan. And I have the Bitcoin, which are potentially less risky than the tokens. So really, the token was the first financial innovation on the blockchain because it separated the financial value from the consensus layer and allowed the issuance of many tokens on a single chain, created the concept of what is effectively debt on the blockchain, allowed the funding of projects and protocols. Then along come things like stablecoins, which let you connect into the sort of traditional finance system more readily and let you start to represent values in dollars and euros. And that's really, I think, where DeFi started. Then probably the next big innovation was the AMMs. I think, really without things like Uniswap and AMM protocols, you'd be very hard to see DeFi where it is today. That kind of also brought with it the advent of sort of yield farming and the idea that people want somewhere to park their crypto and their tokens and earn yield. And then around the edges of that, we've got things like Compound, I think, doing some very, very interesting stuff, lending protocols and everything else. And so, that's kind of where I look at DeFi today and the main areas that we're sort of seeing.
Yep. And then how do you see kind of the role of privacy, and going back to this, like the cypherpunk roots now, and how that still, has a role or still has persisted in the DeFi ecosystem today?
Absolutely. So the cypherpunk thing is probably two main principles that are worth calling out here. One is the privacy principle, and the other is around permissionless innovation. Permissionless innovation is the easy one to talk about because you can look at the internet and you can say, wow, the fact that I could rent a server for next to nothing, build a website, create a product and create success and disrupt huge billion-dollar industries eventually is a huge, huge driver for a massively faster sort of growth and innovation cycle than you would see without that. And that's one of the things that DeFi allows and enables, and one of the things that's at those roots. You remove the gatekeepers. You allow anyone to do anything. You make it so that anyone can sit in their bedroom and write a contract in Solidity or WebAssembly, or deploy something to Cosmos or Polkadot or whichever blockchain they want, and then they can be an innovator. That permissionless innovation is absolutely critical because without it, you go back to the kind of semi-innovative fintech businesses that we see today that really just sort of tweak things around the edges and don't go for the radical innovation. And then the other side is privacy. Privacy is much more difficult because technically it's a lot harder. There are projects like NIM out there looking to create sort of private layers that are token powered. There are obviously things like Zcash and Monero that are looking at private money. And then all of the DeFi protocols on top kind of, to some extent, inherit the privacy of the chains that they use. But also they can build features to sort of enable more or less privacy. In some cases, less privacy is good. Like sometimes you actually want to announce who you are, gain reputation, and have some financial benefit for that. In others, there can be downsides to having complete public traceability of what you've done and who you are, and privacy coins and things will be an interesting and important part of the future. So I think that adding a privacy layer back in as DeFi grows will be important, but I actually think permissionless innovation and the sort of ability of hackers and inventors to come and create new DeFi protocols is the core of what we're aiming for.
Yeah, no, and I think that's why I really like to kind of speak to technology, people who came from really technologist backgrounds, to help myself and a lot of other investors really understand. I mean, nobody yet so far at the conference has really hammered in the importance of permissionless systems, right? We talk about DeFi, talk about decentralized finance and the importance of decentralization within the whole cryptocurrency world, but not everything has to be decentralized, and that's what David Johnston and Johnston's law touches on. But in order to have innovation happen within DeFi, within any part of the crypto ecosystem, it needs to be permissionless. We need people around the world to be able to collaborate on different projects and protocols and kind of put out theses and ideas. What Bitcoin was, it was a white paper. It started as a white paper, and then in a permissionless way, people around the world came together to build what it is today. And that's now happened with a lot of the other projects. So now, touching on kind of what are some of the other limitations, and so I'm kind of getting into Vega a little bit, like some of the limitations that you've tried to solve with Vega protocol.
Yeah, so I'm a founder of Vega protocol, and with Vega, what we've really tried to do is say, we look at where sort of DeFi 1.0 is and what we've got now. We look at what's actually required to have meaningful finance going on the blockchain. And when I say meaningful finance, what I mean is finance that doesn't treat the sort of blockchain as an asset class and just leave it there. So when you have investment, you have finance going on somewhere else. The finance results in capital, and the capital invests in the assets, but that's where the finance stops. And when we make finance meaningful on chain, what we do is we start to bring some of the actual financial activity itself on chain. Some of the capital formation, some of the lending, some of the investment actually happens on chain rather than just being a method of funding and making returns for a fund. So what we've actually tried to solve for in Vega is a few key things. Firstly, MEV, you may have heard of this. It's in traditional finance more commonly known as front running, but front running in crypto is much more wide ranging. It's the ability to see anything someone's doing before they do it and profit from that. And tens, hundreds of millions of dollars are lost even today in DeFi protocols because of this. And in my view, you won't have decentralized finance taken seriously if that adversarial problem is not solved. The next one is capital efficiency. Anyone in finance will know this very well. If you're looking to hedge a risk and you're looking to use a derivative, the difference between putting up 2% of the notional value of the contract and 80% is the difference between making the trade and walking away. Unfortunately, right now in DeFi, a lot of even derivatives are actually over collateralized, meaning you have a notional of X and your collateral required is more than X. That doesn't work for most of the use case of derivatives and is a real thing holding things back. But you need to iterate on the technology. The technology behind Ethereum is not really designed for doing this, and as a result, that's why you end up in this situation. So what you need the L2s, you need the faster blockchains, you need the different layers that are actually designed to optimize for derivatives, to run the risk algorithms, to run exchanges, etc. Vega's doing that. We are building an optimized layer for derivative that connects into the rest of the DeFi, the Web3, the crypto ecosystem, and solves those problems in order to enable sort of real finance on chain.
Right, absolutely. And I think the collateralization problem has been there. I mean, when I first started SolidX in 2013, 2014, we had tried to do total return swaps on Bitcoin, Ethereum, and then other digital assets. And there was another company, LedgerX, that was doing the same with options on digital assets. And they dealt with just existing in the dealing with the existing regulatory framework, and then also dealing with the over collateralized situation, which was higher than the onerous requirements on any other financial asset. So now, thinking about how are people actually using Vega today? How do you see them using it over the next, call it 2-3 years?
Absolutely. So today we recently, in the last couple of months, we stood up the first sort of prototype network, if you like. It's really about proving that our chain works, getting the validators running the network and ensuring that it has decent performance. That's been running a little while. We also have a test net where people can trade, unfortunately with fake money, they can trade cash settled futures on a number of sort of markets, and they can test out the properties of the protocol, build their integrations and get into it that way. Over the next 3 months, we'll be launching the first markets, or we'll be launching the version of the network that can have the first markets, and we'll be watching the community create those markets and start trading. That'll happen, and then also over the course of this year, one of the things we're looking to do is super rapidly iterate, work with people like yourselves in the audience and people out there in the developer community to build features that enable Vega to both sort of satisfy the needs of the community, but also allow really interesting experiments and iteration in terms of actually the innovation at the infrastructure level for DeFi derivatives.
Yeah, and so now bringing it back to kind of two of those core principles with permissionless and privacy, how are those related to Vega? And how you're thinking about building it?
At the very core of Vega, there's a couple of things. Firstly, network itself is always censorship resistant. So the idea is, we as an organization, we're a software organization, we create the open source code, we give it to people out there, validators run it, and what people do with it is up to them. They need to make sure they obey the necessary laws and rules, and actually one of the things we're focused on, which other chains aren't, is building tools to allow you to do that. So actually tools to allow you to report and audit and say, this is what I did and this is why it was okay, so that as a trader, your life is a little bit easier. But it is your role as a trader to ensure that a market is, that you're trading on is legal or whatever, you're compliant. But so you've got this sort of censorship resistance and then this permissionless innovation that means that anyone in the community in a short space of time can stand up a market, can start providing liquidity, and can create new markets and products. And I think that's where the innovation will come in.
Other than Vega, what do you think, is just coming from, your background, what are you seeing as sort of the most important developments or things you're most excited about in the next coming years?
So I think there are a few things going on which I think are really important. The first thing is Ethereum finding its place and working out what it's good for and what it's not. So Ethereum has been a kind of, it's been a one-horse race for a while. Ethereum has an amazing community of developers. It's becoming absolutely sort of the settlement layer of choice. It's becoming the asset issuance layer as well. But it's also had a bunch of scaling problems. There's things it maybe isn't so suitable for, and there's a bunch of stuff happening soon. The Ethereum 2.0, the layer 2s, and all of that. So I think Ethereum working out where it is going to be very good. I'm very excited about the sort of Cosmos ecosystem in general and IBC and things like that, because they enable a much more sophisticated kind of view of building for blockchains. So rather than being stuck in Solidity, which is kind of like this sort of JavaScript, not particularly friendly development environment, you end up with a much richer set of tools for building faster blockchains. So I think watching things like Cosmos and others like Polkadot evolve, watching other sort of faster high-performance L1s come in, and then IBC, which is an inter-blockchain protocol. This is a protocol that basically connects all of these different chains together and lets them talk. And so I think as you see these infrastructural improvements, what that allows is many more things like Vega. Vega was an experiment that relatively few people could do. It's taken quite a long time to build because of its complexity, and it takes a fair amount of money to do as well. So, permissionless innovation, if you need a lot of time and money, and as people who are rare, it's hard to do that. So as these sort of L1s and L2s start to come online and make the experience easier, building things that give sort of, and in fact using Vega itself, building things that give the sort of DeFi 2.0, the next generation of DeFi, will become easier and easier, and that allows much more experimentation, and that will allow kind of the next generation of products to come along and solve some of those problems.
So then, I guess when we think about that in DeFi 2.0 and just some of the other future applications, like how do you see a lot of this audience, or how do you suggest that they really get involved and kind of start to look at the space and actually get their hands dirty? Excuse me.
That's a really good question. I think obviously it depends on your alignment. If you're an investor, you're going to do something slightly different to if you're a developer or if you're in the space for other reasons. But I think one of the key things I would say is that what I'm looking to see in the next couple of years is I'm looking to see the areas where crypto or things built on crypto, so they maybe kind of look like traditional businesses but backed by crypto markets or crypto assets or crypto products, where they start to break into mainstream and start to offer products that could never exist before, products at a better price than before, more efficient hedging and things like that. So start to look for those. People like Compound, building out Compound Treasury and others are making a start there. Start to look for those ways that it crosses over, because I think at the moment you're seeing the crypto assets grow like this and there's been an exponential growth, but the sort of big hockey stick that's going to come next is when one or two things creep into the mainstream and suddenly have access to this pool of capital that's 100 times bigger than just the crypto world. That to me is going to be the thing that propels the next sort of wave. So I would start looking for those.
Yeah, no, I think that's spot on, because I think a lot of the next wave of innovation right now, more and more people are interacting with DeFi without even knowing it. There are new apps and new projects that have been developed where people are earning yield in stablecoin just directly sitting in an app or in a new neobank that's been set up. And I think similarly, we're going to see a lot of those kind of new projects get set up where they're interacting with things like Vega without knowing directly that they're doing it.
Absolutely. I think the general the protocols you see today, whether it's Aave or Vega or Uniswap, for most people, they're never ever going to see this, but what they're going to do is use a product that's branded by a consumer company that's an app, and that app backs the trade you make or the product you buy with something on chain, which means that app is literally design work, product design, marketing, and then all the finance goes and happens on chain. So the ability to create those apps super, super quickly, because you can build a product and deploy it to a chain and let the sort of the market, the infrastructure, and the incentives make it happen is going to enable this innovation. And so, yeah, you won't see these names in sort of as household names. They'll be part of an infrastructure for a whole new sort of wave of products.
Right. And so I always like to provide kind of a, both sides to the story and present some of the risks. Like, what do you see? What worries you about kind of what you see happening within DeFi? And
I think there's, the main worries are probably the ability of regulators to kill exciting things before they get going, and also the ability of the community to kind of naively put money in dumb stuff and lose it, and then sort of lose faith. And so those things, they're probably the biggest worries. I think maybe we have a question over there as well.
Oh,
Patrick Horseman. Barney, you mentioned earlier that you see kind of hacks and exploits as an impediment to real finance coming into DeFi. What do you think the solution is there to fix that?
Really, really good question. And there's a couple of solutions. One of them is the same as the solution to why banks don't get hacked. It's about money, it's about time, it's about testing, it's about investigation, it's about proving things. The other solution is to get a bit smarter about these things. When you look at every Ethereum DeFi protocol, you have Solidity, which is very hard to get right, and then you have almost nothing that's useful for DeFi provided in Ethereum. Ethereum doesn't even provide the token basics. They're solidity contracts. When you look at something like Vega, many of those things are provided for you. You know, basic financial functions, order books, AMM curves, all the things you need for settlement, all the things you need for the life cycle, the things that manage margin and positions and closeouts. You know, all of those things get provided. And what you're doing is writing tiny bits of code that say, this is how this product behaves in this situation, this is how it is valued, or this is how to calculate risk on a product like this. So yeah, you have to get that right, but the order book is not going to have an exploit that allows things to be lost, because every single product uses the same code. And so by doing that, instead of every project recreating this stuff and having the same risks, you have every project using one blockchain's provided primitives, and those things get stronger and stronger over time because you have more and more use. So I think moving more onto the base layer so that it gets tested many, many times is going to be absolutely key to more robust DeFi.
Perfect. Great question. Thanks, Patrick. And thank you, Barney. This has been a great discussion.
Thanks, David. It's been great.